$5 coffee habit could be costing you over $250,000. No, this isn't one of those don't enjoy life videos. I still love coffee, but I've started a simple experiment. Instead of buying coffee every day, I'm investing that money into a S&P 500 ETF every single month for the next 35 years. And today I will show you why that tiny habit shift might be the best financial decision I ever made. I make around $2,500 a month right now. Like most people, I've got bills, rent, food and all the usual stuff. But I wanted to start building long-term wealth without needing a second job or working 14 hours a day. So I thought, what's something small I can cut that won't ruin my life but could make a real difference long term? For me, that was coffee. I used to buy a $5 coffee almost every day. That's $150 a month, $1,800 a year. Now I'm taking that $150 and putting it straight into the S&P 500 ETF every month, and I will do this for 35 years. This video breaks down why I picked the S&P 500, how I invest, how much this could grow into, and why it might be the easiest way to build long-term wealth even on a small income. Okay, let's talk about the coffee. I know, personal finance creators love to attack your morning latte, but this isn't about guilt-tripping you, it's about math. Let's say you spend $5 per weekday on coffee. That's $25 a week, $100 a month if you skip weekends, $1,200 a year. If you just save that, great, but if you invest it instead, things change. Let's say you invest $100 a month in an ETF with a 10% average annual return, which is close to the S&P 500's historical average. Here's what happens. In 10 years, $19,800. In 20 years, $68,700. In 30 years, $198,000, all from skipping one coffee a day. That's the power of compounding. Time is doing the heavy lifting, not your income, not timing the market, just small, consistent habits. Now you might be wondering, why not just save that money in a bank? Here's the thing. High-yield savings accounts are great for short-term goals like an emergency fund, but they don't build wealth over decades. Let's compare 35-year outcome at $150 a month. Saving account at 4%, roughly $123,000. S&P 500 ETF at 10%, $566,000. That's the difference of $443,000. Now, of course, investing has risks. Markets go up and down, but if you zoom out over 20, 30, 40 years, the market has historically always grown. And that's why ETFs, especially ones that track the S&P 500, are a powerful tool. You are investing in the top 500 companies in the US. Brands like Apple, Microsoft, Amazon and Google, all in one click. If you are new to this, let me quickly explain. An ETF is a type of investment that holds many companies inside it. It's like a basket. The S&P 500 ETF holds the top 500 largest publicly traded companies in the US. Instead of betting on one stock like Tesla or Apple, you are buying a little bit of all 500. This gives you instant diversification, lower risk than individual stocks, strong long-term performance. The S&P 500 has returned an average about 10% per year over the last century. That includes wars, recessions, crashes, you name it. So instead of stressing about what to buy, I just automate this every month. Every month when I get paid, I invest $150 into an S&P 500 ETF, and here's how I do it. I use a broker that lets me buy fractional shares with no fees. In Europe, that's XTB, Trading 212 or Interactive Brokers. In the US, think Vanguard, Fidelity or Robinhood. and then I set up an automatic transfer on payday. The money moves before I get a chance to spend it. And after that, I buy a low-fee S&P 500 ETF like Vanguard's VOO, iShares CSPX or SPY. The key is I don't try to time the market. Sometimes the market is up, sometimes it's down. I buy anyway. This is called dollar cost averaging. Over time, this smooths out the ups and downs and removes all the emotional stress from investing. Let's fast forward 35 years and let's say I stick to this $150 a month ETF plan without touching it. Here's the math. $150, 12 months, $1,800 a year. Over 35 years, that's $63,000 invested. At 10% average annual return, $566. Just from redirecting my coffee money. But let's say I start increasing the amount gradually, maybe $200 a month. That's when things explode. $200 a month equals $755,000 in 35 years, and $300 a month is $1.1 million. The point is, this isn't about the coffee. It's about building a habit that could make you a millionaire, even on a normal income. And so, if it's that simple, why don't most people do it? 3 reasons. It's not exciting. People want fast money. Crypto, meme stocks, viral side hustles, long-term investing? Boring. They think it's too late. I've heard this so many times. I'm 28, it's too late to start. But even if you are 30 and invest $150 a month for 35 years, you will be at 65 with over $500,000. That's not too late. And number 3, they don't see the reward right away. Let's be honest, after 3 months your ETF might go up just $50. It's not life-changing yet. But give it 10 years, that's when things compound. Give it 20 years, it snowballs. Give it 35 years, it explodes. You've got to be okay with delayed gratification. And here's the best part. You don't need to go all in. Start with $10 a week or $50 a month. Something is better than nothing. Pick a good broker, buy an S&P 500 ETF, automate it, leave it alone. You don't need to trade. You don't need to beat the market. You just need to be in it consistently. And if you want to take this even further, I started a little challenge. I call it the ETF Coffee Challenge. Here's how it works. Take something you spend money on daily. Coffee, snacks, lunch out, and invest that money instead. Track it for 1 year. Watch how it grows. Bonus points if you track your returns monthly with me. And I'll be sharing my ETF portfolio updates and results right here on the channel. Wins, loses, all of it. This isn't about being perfect, it's about being consistent. So next time someone says, it's just $5, ask yourself, is it just 5 or is it 285,000? You don't need to cut all your fun, just be mindful of your habits and redirect some of that money toward your future. If this video helped you think differently, hit that like button, it helps more people find this content. And if you want to follow my ETF investing journey or join the challenge, subscribe and turn on notifications.